Two people, two completely different starting points. Person A wins $10 million in the lottery. All of his problems are now solved, right? Person B arrives in America with $0, zero connections, and cannot speak English. The point here is no safety net. 5 years later, person A, the lottery winner, is broke and in debt. Network and relationships are destroyed. Mental health shattered, and to put it bluntly, some don't even survive. Person B, the immigrant that arrived in the US 5 years later, has built a thriving business, has employed employees, and is starting to build generational wealth to hand down to their kids. How is this possible? Same country, same opportunities, but different outcomes. The answer isn't luck, it isn't intelligence, but it's the one thing that nobody teaches you. Let's start with the numbers. According to the Certified Financial Planner Board of Standards, over 30% of lottery winners go bankrupt. And most importantly, they go bankrupt within the first 3 to 5 years. 1/3 and more lottery winners are likely to go bankrupt over the average working American. And let's get this right, the average working American never won anything. Think about that for a minute. You win millions of dollars and you're more likely statistically to go broke than the average working man. William Bud Post won $16.2 million in the Pennsylvania lottery in 1988. Within 3 months of winning, his debt totaled $500,000, and by the end of his life, he was over $1 million in debt. His ex-girlfriend sued him for 1/3 of his winnings and won. His brother hired a hitman to kill him so that he would inherit his wealth. And luckily, his brother was arrested and convicted. Bud sank money into losing family businesses. He was even arrested for firing a gun above the head of a bill collector. He said, quote, "I wish it never happened to me. It was a nightmare." Bud Post died in 2006. He was living off of $450 a month. $16.2 million gone. Let's look at another example. Gerald Molswagen from Canada won $10 million in the lottery in 1998. He couldn't handle the fame, and his house was having parties every night. You name it, drugs, alcohol, he was buying his friends presents, he bought 8 of them, all large TVs. He poured money into a logging business which failed, and he was forced to end up working for his friend at a farm, all just to meet ends meet. And unfortunately, Jared Molswagen couldn't take it anymore and hung himself in his parents' garage in 2005. These aren't isolated incidents, they're patterns. And the pattern reveals something that most people don't even consider about wealth. Wealth is not an event, it is a skill. Lottery winners receive wealth without the psychological infrastructure to handle it. They don't have financial literacy, and they don't have the emotional integrity to handle it. And unfortunately, they don't have it in them to say no to bad opportunities or no to toxic individuals. Psychologists even have a name for it. They call it the sudden wealth syndrome. The overwhelming pressure and the unexpected fortune creates anxiety, it creates guilt, and overall it creates paralysis. You're targeted by everybody you know. Family members are suing you. Your friends are asking for handouts. And any opportunity that never came to you before is lining up to knock on your door. And because you've never learned the principles of how to manage money, you end up making catastrophic mistakes. You buy depreciating assets, cars, boats, and jewelry. You invest in businesses that you don't understand. And ultimately, you trust the wrong people. The money disappears faster than it arrives. You're left worse off than you were before because you've lost relationships, your mental health is damaged, and you now lack purpose. Now let's look at the other side, that immigrant that just arrived in America. They are 80% more likely to start a business than the average American. 0.83% of immigrants in the US workforce launched a business, compared to 0.46% of native-born workers. Immigrants make up 13.6% of the US population, but 21.7% of all business owners. And here's the kicker. As of 2024, immigrants made up 46% of the founders of the Fortune 500 companies or their children. 46%, that's the highest percentage it's ever been. We're talking about Google, eBay, Tesla, Yahoo, some of the biggest companies in America. They built multi-billion-dollar empires and they arrived in the country with nothing. So what's the difference? Why do people who start with zero go on to build more wealth than those with millions? Psychology. Immigrants arrive with what I call the wealth building mindset. And not because they're smarter or more intelligent, but because of the situation and circumstances they're faced, it's given them a mindset to preserve and build wealth. And these circumstances build psychological traits that help them understand wealth and the importance of building that capital. Trait number 1, delayed gratification. When you have experienced real scarcity, you understand that sacrificing today is important for a better tomorrow. You don't blow money on status symbols. You save aggressively and you invest in appreciating assets. Trait number 2, long-term thinking. Immigrants think generational. They're not building wealth for themselves, they're building it for their kids and their grandkids. That changes every decision that they make with money. Trait number 3, risk tolerance. If you've already taken the biggest risk of your life, leaving a country for uncertainty and not knowing what the next day will encounter, starting a business doesn't feel that scary. Trait number 4, value creation. Immigrants can't rely on their inheritance or their connections. They have to create value to survive. They have to build a thriving business where the customer wants the product. Trait number 5, resilience. When you've overcome the adversity of immigration, language barriers, discrimination, starting from zero, you develop mental toughness. Failure doesn't destroy you and you feel that you can bounce back. These 5 traits, delayed gratification, long-term thinking, risk tolerance, value creation, resilience, are the foundations of wealth. And here's the brutal truth. You don't develop them through winning the lottery. You develop them through struggle. Let's break down the psychological differences between the two groups, because this is where the real lesson is. Lottery winners suffer from what psychologists call instant gratification bias. They've never had to wait for anything. The money appeared overnight, so they spent it overnight. New cars, new houses, new boats. They're chasing that consumption and that next dopamine hit. But here's the problem. Consumption doesn't build wealth. In fact, it destroys wealth. Every dollar that is spent on a depreciating asset is one less dollar that can be compounded. And because lottery winners never learned to delay gratification, they can't help themselves but spend. Immigrants, on the other hand, have trained their brains to delay gratification. They've lived through scarcity. They know what it's like to go without. So when they finally have it, they don't waste it. They use the money to build businesses, invest it, and generate income. Lottery winners are always thinking short term, what can I buy today? Immigrants are thinking long term, what will this be worth in 20 years? And here's the part that nobody tells you about. Wealth doesn't just require money. It requires identity. Lottery winners lose their identity. Before they won, they was a teacher, a cashier, but afterwards they're known as a lottery winner. Their entire entity becomes something that they didn't earn, and when the money disappears, they have nothing left. Whereas immigrants build their identity around value creation. They're entrepreneurs, builders, problem solvers. Their identity isn't tied to how much money I have, but instead, what can I build? So even if they lose everything, they can go on and rebuild because they have the skill set and mindset. And this is the fundamental truth about wealth. It's not how much money you have, it's who you become. Let's talk about the specific psychological traps that destroy wealth. It's unlikely that you're going to win the lottery, but I can be sure that some of these you will come across in your lifetime. Bias number one is present bias. This is the tendency to prioritize immediate reward over future gains. You'd rather have $100 today than $500 in 5 years. And this is why people buy new cars rather than investing into the boring index fund. This is why they take vacations instead of building businesses. Present bias is the enemy of wealth. Wealth is built by compounding your gains. And compounding, unfortunately, requires time. If you can't delay gratification, you can't build wealth, period. Bias number two is status-seeking behavior. Humans are wired to compete for social status, and in the modern world, status is signaled through consumption. Designer clothes, luxury cars, expensive watches. But here's the trap, the wealthy don't signal their status through consumption. They signal status through ownership. They own businesses, they own real estate, and they own income-producing assets. The true wealthy look boring because they're not trying to impress you. If you're spending money to look wealthy, the truth is you're never going to be wealthy. Bias number three is loss aversion. This is the tendency to feel the pain of loss more than the feel of gain. Studies show that losing $100 feels twice as bad as gaining $100 in the sense of how good it feels. Loss aversion makes you risk adverse. You hoard cash because you're afraid of losing it. You don't invest it because you're scared of the market crashing. You don't start a business because you're afraid of failing. But here's the reality. Wealth requires risk. Not reckless risk, but calculated risk. And if you're paralyzed by risk aversion, you're never going to step out and take that risk that you need to build wealth. And if you don't actively reprogram these biases, you will remain poor. So ask yourself, are you waiting for the lottery, or are you going out there as the immigrant and building your wealth with the right mindset? Because one pathway statistically leads to bankruptcy, whereas the other one goes towards building empires. So if you want to improve your financial literacy through budgeting, ETF investing, and further education, then download my free course. The link is in the description. And most importantly, hit that thumbs up, comment, and subscribe, and I'll see you in the next wealth building video.